You are watching Market Watch, the brief overview of the key events from the world of finance. You probably know that the head of the Federal Reserve has declared his readiness to continue raising the key interest rate if necessary. But investors who risk their money did not believe in the ability of the American regulator to raise the rate. This is indicated by a moderate decrease in the yield of short-term government bonds. For example, securities with a maturity of 6 months have already reached minimum values since the second half of September. Also, the 10-year debt instruments of the U.S. government are declining in price. Against this background, the entire U.S. stock market turned bright green, recovering from the sales. The decline in the yield of U.S. government bonds, although not very strong, supports gold. After all, it is the debt instruments of the American government that are one of the main competitors to paper gold. But at the same time, it is important to understand that the general increase in interest and risk reduces the demand for protective assets, the function of which this precious metal performs. In addition, the last wave of growth was triggered by a panic increase in demand for gold due to a sharp deterioration in the geopolitical situation. Given all this, it is extremely difficult to exclude the risk of profit-taking on previously opened long positions, which can lead to a significant decrease in the value of gold. The nearest support for buyers is the mark of $1,980 per ounce, the breakthrough of which can confirm the willingness of sellers to develop a more powerful wave of decline in the medium term. Shifting to the foreign exchange market, I will draw attention to the inability of the Bank of England to raise the key interest rate, which was the expected decision. But most of the relevant experts predicted that only 2 members of the Monetary Policy Committee of the Bank of England would vote for a rate hike. However, 3 voted in favor of raising the rate, thereby increasing the likelihood of its growth at the next meeting. And although there was no strong strengthening of the sterling, the demand for the pound sterling to US dollar pair increased, pushing it slightly above 1.2200. At the same time, the demand for the pair may also increase, subject to a further decrease in interest in protective assets. After all, in unstable times, the US dollar can also function as a safe haven currency. Another significant moment was the return of Bitcoin quotes under the technical and at the same time psychological support level of $35,000. It has already been said that further growth is possible only if the application by the U.S. Securities and Exchange Commission for the creation of a Bitcoin ETF is approved. So far, this has not happened, which puts pressure on the cryptocurrency. And although most experts agree that the approval of one of the applications is only a matter of time, but investors will not be able to wait very long. After all, one of the scenarios takes into account the Commission's ability to delay the response until the U.S. presidential election, or at least until March 2024. This is too long, and therefore both scenarios will lead to the collapse of Bitcoin. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.